Hello, this is the CEO of Weisenbach Investments, and I'm going to do a market review. So right now you're looking at a chart of the SPDR Spider S&P 500 ETF. And this is essentially a chart of the S&P 500. And we've seen this is probably a lot of institutional buying here at pretty wholesale prices. Just got it real cheap, and of course we see a run up. We had some weakness around this level. I think what this did is just gave us to push to buy, and we're seeing some weakness right here, and it would be nice to get past 146. Yesterday was kind of a bearish day though in general, but the market's recovered a little bit. But we have seen some bad news coming in, and it might affect the S&P a little bit. If we go back to the 1 hour chart, you can kind of see we tanked, but we recovered half the move, so we still have overall good set of picture, good set of fundamentals, good set of market sentiment. You know, the market sentiment is pretty good. And the Russell here is doing pretty well. You can see this area might be a little bit of a worry. Same for here. But we're still leading higher. We did close up pretty bad, and we're up 0.9%, so we still have a pretty strong trend in the Russell here. And for the bond market, we're just coming out lower. I don't really like bonds. I think the Fed is not. There's no confidence in that Fed quantitative easing thing, so the market's just taking the opposite side. And we are going down. Same with the dollar. The dollar is also selling off. And this is actually a pretty good sign of quantitative easing, but it's not really being shown in the bond market. But the dollar is definitely showing it. The thing about it is the Fed it's just evaluating the dollar. So actually it would be quite interesting if we started trading below 77.99. Corn and commodities have been breaking down with the dollar. You know, corn's down and soybeans are down. Markets have lost confidence essentially in agriculture products. This was considered to be a dead cat bounce and a nice place for institutional selling. So I would continue to sell into this area right here with any of the grains. I would continue to sell into this area. It's the same thing for corn, except corn is slightly weaker. See institutional selling right on this moving average, and then we come off. And market sentiment has been bad ever since the summer ended, which is, you know, just kind of showing it. There's no more upside. I mean, there's no more upside when we hit 849, and I knew we would just come off. So it's almost a guarantee things like corn would go down. Gold has also been breaking down along with the dollar. So it means there's we don't have much confidence in gold. We have better confidence, much better confidence in the stock market versus gold. And then lastly, oil. I think oil problems are a little overplayed, so I'm naturally going to take the contrarian side, I would be long oil from here on out. I think it's a pretty high probability thing. Along with oil, we have some global indexes. China's doing well. China's doing great. I was a little worried about China would be able to break past this level, though. I mean, but there's some point we're going to have to see some institutional selling, and that will probably go along with the U.S. stock markets. Along with China, there's Australia. Australia just gapped down. I don't know why. I know they have several troubles, though. So I would buy the kind of a recovery. And if we take a look, you see, Australian unemployment, it fell. So you know, I think it would be best to be long Australia, actually. And we have EWU. Euro is flattened out. There's going to be some institutional or just general selling somewhere. So I would be expecting stock market selling and some sort of recovery in the dollar, and bonds, but you know, the dollar hasn't shown any real interesting area just besides this kind of range boundness we've seen here. And then we have Spain. Spain's doing quite well. I thought it was probably going to be a good buy right here. In this zone, it turned out okay. And yep. And lastly, I think it would be India. India's been doing well, but I think I would rather be short India than anything else. It's a little bit interesting though what's happening at these levels though. So I would wait on any India short, but it looks like it may kind of bounce off here. But still, I don't think India is that great of an investment. The Wall Street Journal reported it a few days ago, and I naturally would take the contrarian view, because when the Wall Street Journal starts reporting things, the best thing to do is to do the opposite, because it has already happened. So anyway, I hope you enjoyed this video. Thank you for listening.